Money never sleeps, pal.
Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by Pat FinTech, the training partner that demystifies fintech and digital finance for financial services professionals. On the show this week, we welcome Joseph Chang.
Hi, I'm Joseph Chang, founder and CIO of Liquibit.
And Webb.
Hi, I'm Webb, co-founder and CTO of Liquibit.
Sharing their story on Liquibit, an algorithmic-driven trading, technology, and asset management company specializing in generating returns trading crypto and crypto derivative instruments globally. In this conversation, we get into the converging paths that brought Joseph and Gray together with Liquibit, each of their respective awakenings on crypto, how arbitrage works across the 24/7 crypto markets, and how they've merged the benefits of their careers in institutional finance and technology into an institutional investment platform in a new asset class. All right here on Money Never Sleeps. Gray, obviously you and I have spoken before, but Joseph, this is the first time that we've chatted. And Joseph, when I had a quick look at your background, I saw some very interesting crossover points for the two of us, with you having the Worcester Polytechnic Institute, a WPI, as we called it. I'm from Massachusetts.
All right.
Originally, I was Boston University for my master's in the 90s, and with Rutgers, which I see on there as well. Rutgers was always a great basketball opponent. I went to the University of Massachusetts at Amherst. So back in the 90s, the heydays of big basketball in the Atlantic 10, and I think Rutgers were part of that.
Yeah. I have to say, I went to Rutgers mostly for night school, so I wasn't really involved in the campus life. But Worcester Polytech and BU, obviously, it was great atmosphere to go to school.
Awesome.
Yeah. I'm still a Celtics fan and watching their games.
Good man. Awesome. Guys, what I want to do is just try and weave this story together. But first, just tell me, how did you guys meet?
Yeah, well, I think for both of us, our last traditional finance jobs were at Citi. So we met at Citi, where I was running Prime Finance, and Gray came to join us to run technology for Prime Finance and security services eventually.
That's the gist of it. So it's been a few years now that you guys have been at least professionally collaborating on things?
Yeah, actually, after I left Citi in 2016, we kind of had a few years where we didn't connect at all. And all of a sudden, just by chance, we decided to have lunch together. I was into crypto. Gray was already knee deep into crypto. And we just found that, we both were doing similar things or had similar interests. And that's when we started talking about getting together.
And at that time, from a point of view, we were just sort of looking to how we were going to expand the foundation that we had with the other co-founders, and really had a big gap for a Joseph type skill set. And so that lunch proved very fruitful, and it kind of rolled on from there, really.
Awesome. Glad to hear it. Just to kind of get some history here as well, Joseph, maybe you can walk us through your backstory, taking us through your 20 plus years in leadership roles in equity and derivative trading, i.e. what I call institutional finance, what we all probably call institutional finance. How do you, and just maybe how that prepped you for Liquibit?
Yeah, I studied engineering in college and didn't think I would go into finance, but I quickly sort of learned it was much more profitable potentially to go to Wall Street. So I joined Merrill Lynch in New York. They sent me to Hong Kong, and I stayed for 20 years and sort of grew with the markets here. As Asian clients gathered more wealth and foreign institutions wanted to invest into Asia, it was a great place to be. So I was in institutional equities for 20 plus years. And then the last sort of 5-10 years, with increased regulation and profitability issues, it just became less and less interesting to be in this space. So I left it and was just looking into different things and came upon crypto. It's interesting how in every part of our life, whether it's, hailing a taxi, ordering food, ordering groceries, everything's been disrupted. But in finance, it hasn't been yet, right? So I see crypto as one of those vehicles that potentially is the beginning of the disruption of traditional finance. So that's how I came here.
Absolutely. I get it. And it's really interesting to hear you say that your take on institutional equities, institutional finance. Someone we had on the show about a year ago, Ambra Subaran from Kaiko. She said, the reason that she left institutional finance is a derivative explosion in the 90s and the 2000s. Innovated the hell out of everything. Like, okay, let's try to create some new instruments here that actually can deliver a different return profile. It was like, well, what's next? where can we go from here? And she saw crypto as the place to go investigate, to go dig deeper, to try to create some new things within finance.
Yeah, I think traditional finance has lost its way to innovate because it's so suffocated by regulations that haven't really been evolving. And more importantly, clients, their demands have changed. And I think the structure of finance, structure of banks and wealth management hasn't been able to change in a flexible manner to meet that demand. And that's what I mean. It's sort of stayed the same the last 50 years in how it's delivered, how products are produced and how it's delivered to clients. And the client has moved on and wants more things. I'll give you an example. Institutional clients in my last sort of years, in my last institutional job, they were much more multi-asset. Whereas banks were still thinking of equities and credit and FX commodities in a very segregated way, for example. But that client already wants a multi-asset approach, but banks continue to go at it sort of by asset class. And it was complete mismatch. But for many reasons, regulatory, profitability, it's very hard for banks to really change the way they go about business. So I think banks have lost their way and their ability to innovate. They can't keep up with what the client wants. And that's where I think new instruments, whether it's blockchain, whether it's AI, fintech, all these things are out of the box, maybe approaches to satisfying that demand.
Okay, I get it. I get where you're coming from, Joseph. Gray, maybe you can share your backstory as well, taking us through the formative years in Dresdner and JP Morgan, and then the experiences that led you to digital asset and Liquibit.
Yeah, sure. I studied economics at university and joined Dresdner instead of going traveling just because my father used to work there and managed to get me in instead of a regular summer job. I landed at Claremont Benson and sort of found my way into the equities technology area. And we actually developed the first sort of internet-facing client service portal for equity post-trade. OptTracker it was called then. And back then it was, I'd never seen a website before. We put something in front of clients. And the wow factor there was pretty addictive, actually. And then JP Morgan, Dresdner was a great training ground, actually. The guys at Claremont really knew their stuff, particularly in equities. Moved to JP Morgan and they said, look, we want someone to go out and help build out our trading platform, equities trading platform in Japan. Are you in? And at 23, that was an opportunity I couldn't say no to. From there, it was 11 years at JP Morgan across all of equities trading, stock borrow loan trading, equities, derivatives, risk management, market making, all within the equities vertical, but various sort of tech roles within that organization. Good times, delivered a lot of product, learned a hell of a lot. And you touched on the derivatives explosion in the mid 2000s. That was almost one of the sort of experiences that give me the light bulb moment when I heard about Ethereum in 2014, walking along Davos Road here in Hong Kong, and I was listening to a podcast and Vitalik was talking and he started talking about smart contracts.
Oh dear.
And I just went, almost as I was walking along the street, and I was like, this, from that whole derivatives background of trying to sort of deliver derivatives risk management, life cycle management systems, smart contracts were another way of doing something like that, but in a much more direct way. And that's when I started to go down the rabbit hole and, came over to Hong Kong, worked at HSBC, worked at Citi, in various sort of equities roles in technology, but ultimately never lost sight of that first podcast I'd heard. Started listening to things on the ferry, commuting, and then ultimately I decided that this is where my future lay, and quit Citi, and I joined Digital Asset as they were building out the office in Hong Kong, ultimately to deliver smart contract technology to enterprises, market infrastructures, Hong Kong Exchange, all the big banks that previously we'd all sort of worked and cut our teeth on. And in parallel got into crypto trading and bumped into a few of the original co-founders of Liquibit, and we had a mutual interest in trading. I was fortunate enough to have some inventory that we picked up in the early days, and that really fueled the Liquibit. And then we sort of launched on the vision to launch a fund product for investors. So a fun journey, and I'm very glad to be in the space we're in.
Awesome. I love it. And it's really interesting that you say when you found out about Ethereum in 2014, because that was my entry point as well. Right? I refer typically to reading the original Bitcoin white paper as my awakening, but I think it was a cluster of things that happened at the same time. And then there was a very complicated Ethereum paper that I read at the same time, right? And going down the rabbit hole does really open your eyes in a big way. So I get that point about your awakening. Joseph, you mentioned in general just learning about this space, but was there a singular moment for you that said, hey, I'm all in?
Yeah, probably not exactly that. My awakening was probably a lot more shallow than you guys. I just in the last big bull market, that's when I got in at the top in typical fashion.
Okay.
But that sort of got me into just trying to understand. I mean, after I got in the top and then obviously market came off, so I was looking at lots and losses myself, and I just sort of went into it a lot deeper. Exactly what is that technology? What is it trying to do? And again, along the lines of, being sort of frustrated, if you will, or maybe even a little bit disappointed in traditional finance not being able to really meet, client demands and client needs. This sort of was impressive because you all of a sudden found this technology that essentially allows you to transfer funds pretty much real time. There's no 2-day settlement. It's 24/7. It's basically anyone can use it, right? It's the ultimate democratization of finance because anybody could get a wallet and start getting involved. Obviously there are pros and cons to all of this, but ultimately the technology is something new that really delivers a solution. And then if you then I got into Ethereum and the smart contracts and applications that could be built on top. Then it became, wow, this is pretty interesting. All the stuff that in a bank that you would require teams and teams of people to settle, to confirm, to onboard, to document, all of that is out the window. It's a very efficient alternative. So once I understood that, then I want to know more and I want to learn and exactly what are the issues and why isn't this already adopted by everybody?
Yeah. I'm with you. That efficiency thing really stuck in my head because I was just, for a very, very long time, it just so focused on efficiency. I saw that. I just saw a quantum leap, right? So this episode of Money Never Sleeps is sponsored by Pat FinTech, demystifying fintech and digital finance for financial services professionals. Pat FinTech enable financial services professionals to transform their capabilities into the digital age with dedicated virtual training programs geared towards those that can develop, deliver, and monitor optimally customized user experiences balanced by appropriate governance, control, and oversight. To learn more about Pat FinTech, go to moneyneversleeps.ie/PAT FinTech. Cool. Well, I think we got a good idea about where you guys are coming from, the different experiences that led to what you guys are doing now with Liquibit, but break down the business for me as I can see 3 pieces of it: trading, technology, and asset management. Can you guys just kind of give me the lowdown on Liquibit today?
Yeah, I mean, for me, the starting point here is actually quite simple. There's a very liquid market for public cryptocurrencies. And for me, given the trading background that I came from, where it was a lot of equities, derivatives, arbitrage, or market making, and eventually wealth management products, for me, crypto is at sort of the beginning of that journey. It's the same sort of movie we've seen before. And when we got together at Liquibit to focus on a strategy of just trading arbitrage, we're part of that liquidity provision, the liquidity creation, and also part of that process to find markets and find prices for assets. And that's what I was involved in emerging equity markets in Asia 20 years ago. So that's how the idea began. And I mean, ultimately, this could lead to other things, other products and other sort of investment strategies, but this is a well-known strategy to start with in an emerging asset class. So originally it was really just to trade our money ourselves in a more risk-managed and proper way and sustainable way. Then we sort of realized, well, there'd be other friends and family that'd be interested because everyone's ultimately looking for some kind of income, a strategy that can consistently return income that is also not correlated with the rest of the markets, right? Today, we live in a world where liquidity is plentiful and essentially everything is correlated, and yields or income is severely challenged, whether it's bond yields or equity dividend yields or real estate rental yields. Everything is challenged. So this is, a nice, unique strategy in an emerging asset class that delivers all of those things.
Gray, when you and I first met, you were working through the setup of the operating model for Liquibit, and maybe just walk us through your approach with doing all that.
Yeah, we were thinking about how to set up the entire entity structure, knowing that we wanted to move from a prop-based setup, which we'd formed in Gibraltar initially back in 2018, because the regulatory noises coming out of Gibraltar were positive for the crypto asset class. which is ultimately what we plumped for there originally. Maintain that as the holding company and the technology provider, actually, with the actually then servicing the asset management entity which we set up. And we tried to make this look and feel like any other alternative investment asset set up. So it's a Cayman manager, it's a Cayman fund. I think we all agreed, having come, all of the co-founders having sort of this sort of 20-year investment banking, institutional finance background, kind of knew what good looked like. And we wanted to make sure that the product felt exactly like something that investors were used to. Fine, it's trading a crypto underlying asset class to generate the returns. But in terms of the operating model, the service providers that you engage with in terms of setting up the documentation, the ongoing operation, it should look and feel like any other alternative investment. And that's the way we went about it. So we did it properly. We invested with the right service providers, legal counsel, both in Cayman and more generally in terms of taking this type of product to market from some expertise in Hong Kong. I guess we didn't really ever question it. I mean, there were a couple of bumps in the road in terms of entity set up and a few things that we discovered along the way. But ultimately, in terms of our vision for how we were going to launch the product and the operating model, I suppose we reverted to type to some extent from our background and experience. And it's proved to be, so far, the right course of action. So,
okay, I get it. That makes sense. And I think as you guys know, putting your deck in front of an institutional investor, just from a friendly face perspective, and it was an institutional investor whose organization had absolutely zero knowledge or viewpoints into the crypto space at all. And the feedback from this institutional investor was, wow, that is impressive, right? Just in seeing your deck, right? And so, kudos to you guys for getting this story put together the right way and for obviously building the performance so far as you have. But tell us how you're running it today, right? How's the business structured and how's it all going?
Yeah, I mean, the nice thing about trading crypto is that you actually, your operational burden from a settlement, monitoring, trading point of view is actually a lot simpler than traditional asset classes, because if you've got the right technology and the right service providers, you can actually do this on a laptop from anywhere in the world. So, everything, and Greg can talk a lot more to this than I can in terms of infrastructure in the cloud, all that sort of stuff we've built and put together ourselves using the best service providers out there. For us today, it's really about just continuing to do what we do best, really. I mean, the market gives you opportunities. You want to maximize those opportunities in a risk-managed way, and to continue building that track record while trying to attract more investors, really. And I guess the more institutional, more professional that client is, then the more they expect to see in terms of track record, risk management, parameters and policies. So we feel that we had to build it this way so that we could be able to show these people that we've set it up in the best way we can, the best, in a best-in-class manner for an offshore hedge fund.
I mean, there's the boring stuff, Pete, like making sure that, we've got high availability for the trading platform. We built this thing from the ground up ourselves. It's entirely proprietary. Locational deployment of the risk management engine and the trading engines as close as possible to the exchanges and venues that we trade with. Making sure that we've got trading desk coverage 24/7, because as we know, crypto 24/7. So we've got desk operations, 2 locations in Asia and in Europe. In terms of the infrastructure, it's deployed across Asia and Europe again, so we can cherry pick the best places to actually put the execution engine closest to the venues. And making sure that we test that on a regular basis in terms of failover, making sure that we're, the boring things like making sure that we're patched appropriately for viruses, security audits, reviews, pen testing, all of this stuff that I guess we never questioned. The team are operating in the way that they used to be operating. The fact that we happen to be trading a crypto underlying asset class enables us to generate the returns that we have. But the way we go about it, the way the operating system sets up position keeping, would look relatively familiar, actually, to anyone from an institutional finance background, with the exception, of course, that we can handle 8 decimal places, no problem.
Yeah, exactly. Thank God for Satoshis. All of these things that you're mentioning, Gray, you are saying quite boring, right? But they are all of the things that will form a full day's worth of a deep dive of operational due diligence from a big institutional investor, right? They kind of want to know all this stuff and they need that. And that adds some good weight to your credibility as an investment management business when you can talk to these things. And Gray, just curious, you've built a lot of this stuff before in the institutional equity space, in PB, in derivatives. Was it that big of a leap to build it in the crypto space, or did a lot of these background principles apply here?
I think a lot of the foundational work from the co-founders has been done based off that background of institutional finance. And so a lot of it is very, very similar as I've talked about in terms of the operational setup, the infrastructure. The one thing that you learn in crypto, I think, in terms of deployment and actually releasing software into the wild and have that working effectively, particularly when you're managing not only your own money, but those of your investors, is testing. Again, it's back to a boring point, but not all exchanges are born equal. And this is probably the big difference when it comes to crypto versus institutional finance. The venues that you're connecting and trading to, the standards with which they apply to themselves can be variable. And so you need to be on your toes in terms of understanding how does connectivity work, when are API upgrades happening, how are they handling product distribution, releasing new contracts, how is that getting communicated to their customers, how do we make sure that we're not caught out, even reference data, market data, those kind of things. That there's no uniform way of handling these across the counterparties that we trade with. It's part of our due diligence when we're connecting up to some of these venues in terms of how do they operate, how do they notify us of outages, planned upgrades. Again, the day-to-day operational piece of how we would expect to run our own shop internally back in the day, we're having to sort of ask those questions, much like the questions Joseph would ask someone like me back at Citi. How are you doing this? How are you supporting it? They're exactly the same questions that we're now asking our trading counterparts from the exchanges. So that's carried through very well. We've just had to be much more nimble on our feet in reacting to the fact that we can ask these questions, we can get answers, but they don't necessarily all behave in a uniform manner yet.
I gotcha. No, that's helpful. Joseph, maybe can you explain an arbitrage strategy in simple terms and why you think this is particularly relevant to crypto as an asset class?
Yeah, sure. I guess arbitrage in the simplest way to think about it is if you have the same asset or a fungible product, let's say, that could be bought, sold at two different prices for whatever reasons. And generally those reasons are some sort of inefficiencies. So let's say, an apple in one market costs $1, but in the market, 5 minutes away, it's at $2. You can buy it in one place, sell it the other place, and make a riskless profit in between. That's essentially arbitrage. So what we do is arbitrage in the crypto market, very specifically crypto itself and the futures contract on that crypto. So, for example, Bitcoin versus futures on Bitcoin. And the futures contract, if you're familiar with it, is simply a contract to agree to buy that asset at a future date. So there's a relationship between the asset and the future contract whereby they must equal to each other at the expiration of the futures. Little bit involved, but ultimately these two things should trade basically in line. Eventually, the price should be the same. So what happens here, as in other asset classes like equities and commodities, is that the futures contract is usually used as a tool of speculation, particularly by retail clients. And in crypto, this behavior is multiplied 100 times. Today, retail investors, particularly, and a lot of these investors are in Asia, they go into crypto via futures because they can get a lot of leverage. In some cases, 100 times leverage. So for them, it becomes a super speculative tool, which means that when they're coming in bunches to buy or sell that futures contract, it can trade vastly far away from the underlying asset. So the Bitcoin futures could trade much richer or much more expensively than Bitcoin itself. And that's when we can come in and offset that flow, sell the futures when it's very high, and hedge immediately with Bitcoin itself and wait for convergence. And that's ultimately what we're trying to do. It's sometimes known as cash and carry. And this is a strategy that's prevalent in all the asset classes, particularly ones that are emerging markets or retail driven, where these mispricings and these sort of irrational behavior appears often.
Aha, that makes sense. You're going to see these bigger spreads and gaps between the futures and the underlying because of how the crypto markets operate.
That's right.
And what's always fascinating to me is that I can wake up in the morning, check out my crypto wallet and see, okay, that just happened overnight while I was sleeping. Another part of the world, there's information flows going on, there's market sentiment going on, There's all different types of factors that can drive the prices up and down. In a traditional market, that's open 8 to 12 hours a day, you don't have that same impact. So I get it now, and seeing those spreads makes it really interesting. I know that you guys are running what is called a market neutral fund. That must be hard to do when you see these directional runs that are perhaps tempting for us as individuals, as traders, right, for our own accounts. But investors have signed up for a market neutral fund, which means that you are staying on the sidelines unless there are arbitrage opportunities, unless you're identifying these spreads between the underlying, say, Bitcoin and the Bitcoin futures or other crypto assets. Given that you guys have some deep insights on the market, are there other opportunities that you guys follow on the directional side that may lead to the development of new products here coming out of Liquibit?
Yeah, absolutely. Absolutely. I think just like in traditional asset classes, you have different strategies, right? So an arbitrage strategy is perhaps the most conservative and low risk, but also therefore lower reward type of strategy versus one that might be directional. But in crypto, we think that this risk return is actually very much skewed to the investor's benefit because you can generate quite a bit of return just being market neutral. Having said that, there's obviously room for directional strategies. Yes, and I mean, from an infrastructure point of view, what we've built for arbitrage can apply to many of these other strategies, so it's easily scalable. But I think our view is that we won't launch another strategy until we can, develop some sort of a quantitative model that can outperform and deliver returns in a sustainable fashion, right? I think anyone can trade a bull market and make some money in the short term, but over a long term, is that sustainable? Most likely not. So I think for investment strategy to really survive, grow, and thrive, it has to be something that consistently delivers outperformance in a reliable, sustainable way. And that's something that we're working on, but it's not as easy as said.
Yeah, I hear you. You got me thinking now because we had Andrew Mullaney on the show a couple of weeks ago. He's from Premind AI. He's streaming 1 million news stories a day against 57,000 stock prices a day. We first had him on the show 2 years ago, right? He's now just, him and his co-founder and the technical team they built up, just getting it out to market in Q4 this year, right? Because it's taken 2 years to train the machine effectively. So if you guys are algorithmic, you guys are systematic, you're saying we've built a system here which can identify arbitrage opportunities, expanding that out to be able to identify the opportunities in the market on a directional run and have all of the rules, that's another 2 years, maybe sooner, but it's a deep space is what I'm saying.
Yeah, no, totally agreed.
Okay. Thinking about connecting all this back to where you guys came from, Gray, I know you've provided a bit of insight on this already, but both of you guys with your long track records in institutional finance, can you think of maybe one or two key things that each of you have learned about running business units in institutional finance and technology that have been helpful to how you guys are running Liquibit?
I'll start. I think it's being organized. Just because you're a startup in a cool crypto space, the sort of develop fast and break it approach doesn't work. So you got to temper the there's a new exchange. Well, they got some futures contracts. That's interesting. Let's just go and start coding up against that API. That's not a smart approach. So I think that being structured and organized in our decision making and balancing out the investment that we need to make. We haven't got limitless resources, so the prioritization is absolutely critical. And again, we have the same trade-offs around what do we do in terms of platform, behind the scenes grunt work versus ultimately trying to deliver a little bit more fine-tuning, say, to the algos in terms of identifying other opportunities for deploying capital. And then the other one, I touched on it earlier, it's really dull, but the one that's really come through is testing. And it's in terms of the level of change that's happening in the things that we can't control, fine, we have to be reactive and nimble to that, but let's make sure that we do a bloody good job of staying on top of the things that we can control. And that is done by sheer hard work and testing against what we hope the outcomes to be. So I'd say that's probably the two main things.
Really interesting. Yeah, that testing component is pretty cool, especially when it's all within your own remit, right? And that you don't have a 12-month testing program with hiring a massive amount of consultants to help you do that while you're running the day job, right? It's just not at that scale. So it's great to be able to do it that way. Joseph, what about you? What are a couple of things from your past that you learned about running business units that have been helpful to how you're running Liquibit?
Yeah, I mean, I guess one thing is just people, right? In banks, you're dealing with all sorts of personalities, all sorts of egos, people that are really good at what they do. It's how you bring them together to work in a team and lean on each person's strengths and commit to each other to build something out. So that's definitely one of the things. I guess the other thing is being trained in traditional finance, you have this deep appreciation for managing other people's money or having other people part with their hard-earned money to invest in your product or in your fund or in your strategy. And I think in crypto, that process is even harder because in the last 6 months, everyone's come around to thinking more positively about crypto. But when we first came up with this idea and was out there looking for service providers, looking for our initial sort of friends and family to come and invest in it, that burden of proof is much higher because crypto's always got a bad rap for this and that, and there's always bad news headlines every now and then about some sort of fraud. So it's having that appreciation, making sure you're doing things from the ground up, step by step, to sort of prove your process and bolster your credibility. Yeah. I think that's where we have some edge over the 20-something-year-olds that are trying to do the same thing.
Yeah, I know. I was listening to something on Clubhouse, right, for my sins, that was probably about 10, 15 people talking about different crypto trading strategies, talking about different financial trading strategies overall. And one person was giving an example of a stock split. And one of the crypto native guys was like, what's a stock split? Right. And it was just amazing to hear him talking about, running millions and millions of dollars through these trading strategies without actually having knowledge of what a stock split is. Because he was like 24, yeah. Right. So, and had never actually gone through an educational journey on traditional finance, but he knows an awful lot about the crypto space overall, about individual assets, about trading in crypto. And so he didn't need to know what a stock split was, and he's doing just fine. But if you're building a business that is attractive to institutional investors, it's great to have this background, and it's great to have this strong grounding in the core principles of finance to take with you into the future,
Yeah, no, absolutely.
Cool. Listen, we're at the point of the podcast where I like to ask our final famous question. What is one thing that people wouldn't expect to know about you? Gray, how about you go first?
I think one of the things, in fact, I'm not even sure the other co-founders know this, is that I've recently stumbled into aquascaping. Yes, which is a very posh word of basically saying laying down plants in a fish tank. It's been a joy. I have to say, in terms of planting, getting the lighting right, the different variations on the LED colors, seeing how the plants react to different types of light, the duration, it's been wonderful and very relaxing, and putting it in the world. I love diving. I love spending time in the water, and being able to bring this sort of water garden into the house has been something that I've stumbled on in the last 2 months. And we'll see where it goes. But I'm sure the other guys about it recently, because it's
That's awesome. One, I did that when I was a kid, a bit more with plastic and stones, but it's almost like that love of scuba or love of being underwater that you have. It's almost like that, retired train engineer that makes that perfect scale model of a full train set, track, mountains, waterfalls, all that type of stuff. It's kind of what I'm feeling here. That's pretty cool.
I don't know if I want to take that analogy, but yeah, go on, I'll take it. Why not?
Okay, yeah, I'll go with that. Joseph, what about you? What's one thing that people wouldn't expect to know about you?
Yeah, no, I was just gonna say, as somebody that's close to Gray, I never knew that. I mean, he's actually a very accomplished triathlon. I thought he was going to talk about that, but this is quite the opposite end of extreme geekiness, which is more like me, actually. So one thing that I actually do know, but I'm a big wine collector. I'm a bit of a wine geek. I've got more than 10,000 bottles in my collection, and I get into reading about vineyards and terroir and grapes and things like that. Yeah, so outside of crypto and arbitrage, that's my passion.
Yeah, no, you gotta have that real world asset to hold on to, right? Are you a user of the Vivino app?
No, I mean, it's great. It's a good app, but I wouldn't say, for true wine lovers, it's a bit shallow. It's not enough content.
Okay.
If you've ever used Cellar Tracker, I think they're...
No, I will have a look at that. I'm more of a aficionado than a curator, but I know a few other people in the crypto space that are big into wine. So, you're in good company there.
Yeah. Good.
Very good. All right. Well, guys, listen, thank you so much for coming on to the show today. Really appreciate it. It's a great story that you guys have and what you're building and what you've built so far at Liquibit. So just keep it moving. Yeah.
Yeah. Thanks, Pete.
Cheers, Pete. Good to talk to you.
Good to talk to you.
Thanks, guys. That does it for this week, folks. Thanks to Joseph and Gray for opening up their minds to help us figure out why they do what they do. Links are on our website at moneyneversleeps.ie, so check us out online and subscribe to our Money Never Sleeps newsletter as well. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm the founding partner at Norio Ventures, and I'm an early-stage startup advisor and investor focused on fintech and digital assets. If you'd like to talk to me about your business, drop me a voicemail on moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!